I'm Meg Green with AM Best TV. We're in New York for the annual Joint Industry Forum, and joining us now is Stefan Holzberger, Chief Rating Officer for AM Best. So Stefan, what are your expectations for 2019?
Well, Meg, I think after two very challenging years in 2017 and 2018 from a natural catastrophe perspective, we may be reaching an inflection point in 2019 when it comes to capacity, rates, and terms and conditions. We're in the insurance industry, we're very used to severe natural catastrophes, but there were some elements of the events over the last couple of years that to a degree caught the industry by surprise. By that I mean, we're talking about in late last year the severity of the California wildfires, which is a peril that's not overly well modeled by the modeling companies. So we had a combination of less than robust modeling data for the insurance companies to rely on, and then just an unprecedented level of severity for those California wildfires last year. The year before, with Hurricane Maria hitting Puerto Rico so hard, I don't think the CAT models or those of us that are following the insurance industry ever really expected that level of business interruption. And the complexity of those losses and the fact that those reserves are proving inadequate even a year plus post the event. We've seen adverse reserve development for many players in the market on the primary and the reinsurance side. That's also had implications for alternative capacity. There's been some headlines about collateralized programs where the collateral is not being released because of this problem with adverse development on losses that happened over a year ago. So that's led some ILS fund managers, ILS investors to start thinking about how much capacity do I really want to put into insurance risk or insurance as an asset class. So all of those factors coming together could have implications for the amount of capacity that's available on the reinsurance and the retro side. Retro is another interesting phenomenon over the last 12 months where, the severity of the events of 2017 and 2018 really hit the retro market pretty hard. And if that capacity shrinks back, all of the players in the market will have to reassess the amount of risk that they retain on their books and what mechanisms are available to them to cede that risk and protect their own balance sheet.
And how does that impact your outlook for the PC industry in 2019?
Right, so it does so happen that for personal lines, commercial lines, and PC reinsurance in the United States, we have a stable outlook on all three of those segments. And that's driven to a large degree by the amount of capacity that's available to support those businesses, although I should mention that the amount of capacity in the market's a bit of a double-edged sword because from a credit perspective, it's certainly helping the market and policyholders and insurance companies to underwrite that business, but it's also driving rates down, it's expanding terms and conditions, and it's leading to some irrational behavior in the market. But that said, I think we see a level of discipline in the property and casualty sector, primary and reinsurance. We see some rates tightening, and frankly, our expectation for 2019 is it will be a better rate environment for property casualty than it's been over the last several years.
Stefan, thank you for speaking with us today.
Thanks, Meg.
For AM Best TV in New York, I'm Meg Green.